economist at Moody's Analytics, joins us live now from Philadelphia. Mark, thank you so much for being with us. So just explain to us that aspect of it, this idea that student loan payments have now been reinstated, and what tangible effect that will have on consumer spending.
Yeah, it'll be a bit of a headwind, Zane. If you do a little bit of arithmetic, roughly 20 million student loan borrowers will start to pay again on their debt. It's about $250, $300 more a month for these folks, and if you add it all up, it's about $5 billion a month, and that'll shave a couple 0.3% off of consumer spending GDP growth over the course of the coming year. So, it's not one of these things that's going to cause consumer spending to come to a standstill. Consumers have a lot going for them. We saw today's job numbers; they were fantastic, but it is a bit of a headwind, and it's coming at a time when the economy will be struggling later this year and into next. So recession risks are still quite high, and this headwind will, if I were king, I wouldn't do it right now, but I guess there's no really any good time to do it.
Again, speaking of jobs numbers, you mentioned obviously the headline number is pretty impressive. The unemployment rate did tick up slightly to 3.7%. Just walk us through what the Fed does with this. How does the Fed read this report?
Yeah, that's a great question. My sense is it won't change any minds on the Fed. I mean, it's something in there for everybody. I mean, the top line 339,000 job gain. Well, that says a pretty strong labor market, probably too strong for most. But at the same time, as you pointed out, the unemployment rate rose. If you dig even deeper into the bowels, there's some reasons to think that the economy is slowing. Number of hours worked per week declined. We saw wage growth moderate. So all in all, I think the Fed, it's kind of a wash, I think. And when it's all said and done, my sense is they will pause their rate hikes at this next meeting in a couple of weeks. That's what I think they will do, but I certainly think that's what they should do.
Okay. And just in terms of Fitch, I mean, this news from Fitch that they are going to keep the U.S. AAA rating on negative watch, despite the fact that there has been a debt deal reached. Are you surprised by that? What are your thoughts on that?
Well, I would have been surprised if they downgraded. Yeah. I mean, because at the end of the day, lawmakers got it together and passed.
I mean, a downgrade technically is still possible. A downgrade technically is still possible.
Yeah, I mean, they're on negative watch, right? So, I mean, that means that there is a reasonable probability that they will get downgraded, but I suspect not, because it came to a reasonable conclusion, and the debt limit deals, in the grand scheme of things, pretty good. I mean, the broader economic impacts are pretty small. So, and when you think about it, the center held, right? I mean, you got Republicans kind of in the center and Democrats kind of in the center coming together, getting enough votes to get it across the finish line. So that was a compromise. And you got people on either end of the political spectrum complaining about it. That's a compromise. So I think there's a lot of to take some solace in this. So I don't think they'll downgrade. But having said that, we've got a lot more script to be written here over the years. The next go around is in early 2025. So could downgrade at that point if we don't get it together.
The Senate held, but obviously the gridlock in Washington is still a problem here, and that's the point they're getting at. So you touched on the fact that recession at this point is still likely. Has your calculation in terms of when we might see a recession changed at all based on the sorts of jobs numbers we're seeing and how soft of a landing it's going to be?
No, I don't think there's going to be a recession. I mean, I think we have a fighting chance. Recession risks are high, no doubt about it. I mean, when inflation is high and the reserves in the warpath, the recession risks are high. And you got a lot of smart folks out there thinking recession. My sense is we have a fighting chance to get through this without an economic downturn.
I misheard you. I apologize, Mark. I misheard you. Okay, so you don't think there's going to be a recession then? Okay. Right.
Because and I feel a lot better today about that than because of these numbers. I mean,
yes, of course.
It's hard to see, right? Yeah.
I was just saying to Matt Egan, the reporter before you, that the recession, it feels as though the recession just keeps getting postponed, and we're nowhere near the sort of gloomy forecasts we were getting this time last year or even around Christmas in terms of what was going to happen this year. So I guess the calculation has changed. Mark, Zandi, we have to leave it there. Thank you so much.
Sure. Thank you.